Welcome to The Most Mindset, where you'll hear real conversations about mindset, mortgages, and mastery for loan officers and originators who have outgrown being undervalued and underpaid. Here's your host, Michael Most.
Welcome everyone back to another episode of The Most Mindset, where we are trying to help originators feel more valued as well as realize their own value. So I'm extremely grateful to have Ian Olsen, one of my favorite people that I work with in this business. Quick plug for Ian. You guys ever need to go to a networking event or need like a plus one, this is the guy you want in the room with you. Total awesome personality. Great guy. Thanks for joining me today, Ian. Appreciate it.
Thank you, Michael. Appreciate having on.
Yeah. So why don't we just get started with a little background of you? Why don't you walk me through, if you can, so that everyone listening can understand how long have you been in the business? What got you in the business? And things of that sort. But before we jump right into that, why don't we start with a little bit about you, right? So to prepare you. Where'd you grow up? Where'd you go to college? What was your dream job before all this happened with mortgage?
So owning an NFL team was a great dream job.
Right.
I grew up in Eastern Washington. On a family farm. We grew up with orchards. And so my plan was to essentially extend that, but go to university and then come back and be a teacher and coach and farmer and kind of run the family business. But that changed. In university, I started playing rugby, and the 3 of the 4 coaches that I had were bond traders. And so I was invited aboard to become a trading assistant my last 2 years at university with them, and fell in love with it. It was exciting. You know, the phones were going like crazy, business to business. It was 5 a.m. to 2 p.m. And so I just found a real taste for that. My original plan was actually to go wrestle at university in a small town in Eastern Washington, but dreamt of living the big city college life, fraternity, playing sports. And so I pivoted last minute and decided to make my way to Seattle. And with rugby, after university, and after my internship was done, I was invited to play for a club and was given an opportunity to become an institutional trader for a local regional public finance company. Gosh, and that was in 99. 2001, we spun off and started a trading platform, an online trading platform that was a little different than what was in the market with what was currently being used. You know, the pink tickets were being used to trade, and we had a fairly sophisticated intranet that we essentially created a web-based platform to allow bonds to be built on our platform and disseminated through the back end of the platform. That sold in 01. And shortly thereafter, I took a few months off and traveled with my girlfriend, became my wife, and got back and decided was invited by actually another rugby person to get involved in the mortgage business. And that was in October of 2001.
Okay, so there's a lot to unpack there, as we would say. Let's just break that down a little bit. So you want to be a teacher and whatnot, but then you have a natural skill. You're obviously a gifted athlete, and you get into rugby in college. And then did you play semi-professional or professional rugby at any point?
I did. I played for team Old Puget Sound Beach, which was one of 16 clubs belonging to the Super League around the country, and did that until, close to 30. And then at that point, I hung it up. But the Super League is now essentially it went defunct and reorged, and it has now become what is called Major League Rugby today, which is now the Seattle Seawolves.
So you're 30. Were you doing bonds and mortgages at this time, or you were fully focused on rugby?
No, it was rugby back then. You know, they reorged, and now it's a little bit different. The pay structure is different. People are getting paid a bit more. They paid for our kit, our travel, our hotel, but none of us were making salaries. They would bring guys in from other countries and provide with, housing and jobs and things like that. And we had a lot of talent come in, former World Cup winners. And that was, so it was something that I did in conjunction with work. And at that point, I was in mortgage. So
now, did you see the correlation? Because we have kids, as you know, and I think you and I talk about this from time to time, how sports is a real structure driver for children. And that's why a lot of us really promote it as heavily as we do with our children. And it teaches them structure, discipline, how to play as a team, how to work as a team. What would you say is the greatest correlation, besides for all those general terms, but anything where like you've been in this industry and you've looked back and be like, well, thank God I had my experience from playing sports or rugby that you were able to correlate to what you do day to day?
Oh gosh, man. I mean, as you know, we get pressed a lot in this business with all the moving parts and all the things that sometimes, can go off the rails, and you need to be calm in the chaos, and since you roll your sleeves up and not be afraid to make those calls and share the news, good or bad. But I think having like tough moments in sports and organizations where you're working with other people is something where if you can stay calm and work together as a collective, finding solutions and successes through that can actually be a great gift and something that I think can really help and solidify relationships because you learn and loss and when troubles happen and solutions are found, that's a real way to grow as a unit, as a team, as an individual. So yeah, I think there's a lot of correlations to all of it.
Were you like captain of your team or like MVP at any point throughout your career?
At university level, yeah. At the semi level, gosh, there was never captain, but was a fairly productive player. Yes.
Right. And the reason I ask, not to just boast your accolades, but like there are personalities that are captains, right? And then correlating that to what we do on a daily basis of like, how do you lead your team around? Versus the other side of team sports is if someone wasn't a captain, like in your case, but you knew how to take direction from a
You know,
captain. You knew how to
that's
take direction from a
That's a great
coach.
point, and I feel like I was really fortunate enough to be around a lot of really good people and good leaders that didn't just lead, but made leaders. And so all of that sort of translated and it all rubbed off, and that's one of the reasons why I felt we had a lot of success as a program, both at university and both at the higher level, that the people I was surrounded by were great leaders that made other leaders, and all that is translated essentially throughout my life. So that's been very
That's
helpful.
amazing. That's great. So let's segue into the next portion of your life. So you start doing bonds and stuff, which is very, very interesting. And then everyone has this like aha moment where it's like, oh my God, someone introduces you or you get into mortgage of some level. And sometimes it's a funny story of how you rolled into it. And other times it's just like just a natural progression of what you were from. Very few of us grow up, like you said before, you grew up on a farm and wanted to maybe be a teacher. Very few people grow up going, I want to be a mortgage guy when I grow up, right? So
Hmm.
walk us through a little bit of that correlation from the bonds that you were doing in the trading desk, and then that ended in 2001, but you kind of segued into mortgage. Was there something humorous or funny that correlated from one to the other? What was that aha moment that you were going to actually do mortgages from that transition?
Well, it's that wasn't the plan. And when we'd sold the company and I got back and I had taken a couple months off, 2 or 3 months off, I just it was all again, it was connected to organizations. In this case, it was rugby that had conversations with a few people that were also part of the rugby club that invited me aboard to just have a listen and see what it was about. I was a little surprised, as you know, during those times where I came in. I'm like, okay, so what is the licensing process? How do we go through this whole deal? And there wasn't, and so that was a little bit of a surprise to me. But I love the idea of you know, feel like I do well meeting people and finding out about people and finding out, seeing what their interests are. And it was an opportunity for me to just be around and meet a lot of people along the way and be part of something that's really important, and oftentimes the biggest investment of people's lives. And to be a part of that was something that I found interesting. And so I got in at a time where I was fortunate enough to get involved in a refi market that allowed me to keep the wheels greased, to become more and more familiar with the process and how things work, and then understanding like which parts of the process need to be really tended to the most, which I found the people that I'm working with hand in hand on a day-to-day, assistants and processing staff and underwriting, ultimately are my best clients. And those are the ones I felt I needed to take the most care of, because when things get awry, having them as a collective group to be able to make sure that we cross the finish line in a way that's positive for everybody, those people need to be on board. And I've been, again, very fortunate to surround myself with people that I know, like, and trust in those departments.
So now the year you started mortgages is what?
Yeah, October 2001.
So
Yes.
similarly, I was supposed to go to law school, and I got an intern, well, full-time job. It was an intermediary between law school and actually going to law school. I had an extra 2 years while I was studying for LSATs, and I joined the mortgage company. That
Okay.
was in 99. And by 2001, when I was going to law school, they were like, just try sales. So I'm very familiar with that timeline of 2001
Yeah.
when you were like first really getting into. So timing could not have been better for any of us. But walk me
Mm,
through that. Is that, as everyone knows, there's institution banks like a Wells Fargo, Bank of America, Chase, B of A, right?
mhm.
And then you have your IMBs, the independent mortgage bankers, and then the platform we're on now, which is mortgage brokers. So in
Yes.
2001, are you part of a IMB and
I
correspondent?
was with Seattle Mortgage Company, right? We had our own money and we had the ability to broker, which was fine too. But most of the stuff that I did, I kept in house, kept very simple. And honestly, being new into the business and didn't want to like venture too far out into unfamiliar territory, it felt to be a safer play to stay with our in-house money, with our in-house underwriter, in-house staff, because I believed that that was what was going to be the smoothest path for everybody. Especially as I was getting more and more familiar. And then as things progressed and started becoming more and more familiar and brokering here and there, I started to get it and had my staff, still help me with the brokering process. And it was all great. Every move that I've made throughout the process, Seattle Mortgage got over their skis during the financial crisis. And, we left with hugs and handshakes, but they had to sort of revamp what they were doing. And I moved to another correspondent, which was MetLife. And the same thing during the whole Dodd-Frank, they had to end up unwinding their business altogether. And so I went with another local organization, which was Cobalt Mortgage, that ultimately became Caliber, that ultimately recently sold. But from Caliber, I went to Guaranteed Rate because I thought the platform was great. Of all the correspondents I've ever been a part of, I thought it was the best. And then they opened that joint venture with Origin Point, which I thought was a really nice opportunity to use that same platform, but to be in front of other realtors and things like that. And then, gosh, a couple of years thereafter, which was recently, had our first conversation, with you and talked about this broker model, which after 24 years in the business started making more and more sense. It was something that I was curious about, but always a little bit reluctant, a little bit nervous about, well, what about the processing and the underwriting and this is all third partied and I was a little bit concerned about things being a little like not, is in control. But as I found, and with a lot of things, when things are third partied, things become very efficient. Starting with the fellow you introduced me to with the IT, he did some things so fast and so efficient that would take me, weeks longer than it took him days, not weeks, to do the things that I needed him to do in terms of establishing my database, my CRM, and all the things that went along with it, building the website, and provided a lot of comfort. And so I keep him on retainer. I haven't needed him for much, although we're going to dive into more things. It's nice to know that I have somebody that's that efficient in what he does more than anybody I've ever worked with before. Brandon Rubin, in case anybody's listening, the guy's fabulous. And then the
Let,
processing system. Sorry.
let me back up there for a second. You said you did MetLife as a stint in there. MetLife, the bank, or
Yeah, yeah, and the mortgage
what
business
years
was
was that?
2012. It was a short stint because then it unwound, and the mortgage business was 3% of their business,
It's
but
funny, I was
because
there at the same exact time. You and I never even crossed on that. But yeah,
you were at MetLife.
I was at MetLife from
Okay,
basically exactly 2010 to 2012 out of New York City.
okay,
And then our group got sold off to Citibank. But MetLife was fantastic, closing FHA loans in 5, 6 days. And it was a big bank, and there's no one in the world that didn't love Snoopy. We would have
yes,
Snoopy come to our events and stuff. So it's
yeah.
interesting. You did
They
24.
protected that Snoopy, I'll tell you. They were very careful on how they let that Snoopy out.
Very, very protective in a good way. Do you know that like you couldn't just it reminds me of a quick funny story where I was trying to do an event with realtors and there's only two Snoopies and they were both booked. And I said, "What's the big deal? Let's just go rent a Snoopy costume." And
No,
the
no,
fire I got back was like, there's only one, like they had rules around the way Snoopy had to act, the way Snoopy had to look, and
yeah,
the brand that they so well protected around it. It was mortgage heaven. I had a couple of great
mhm,
experiences in my time, but definitely MetLife being one of them. They had no legacy issues coming out of the
right,
collapse and stuff, so they really understood mortgage. So back to you, although it took you 24 years to come join the good side and the enjoyable side of the broker side, you weren't only IMB there. You were a correspondent IMB for a lot of it, but you kind of took a break and played a little with the big banks, which are very heavy on regulation and a little white box. Although
mm,
MetLife wasn't really like that, they were a lot more open and were
mhm,
really led by an insurance company, which is kind of the largest backer to MBSs, going back to your bond experience and stuff.
Right.
So, what was that transition like going out of the IMB to a bank and then coming back to the IMB model?
Well, going into that, I went into that knowing the leadership team from just previous years being in the business and trusting them, and took my time in making that decision. Like you, I thought the experience there was, well, the experience I've had along the way has been great. Yeah, like every step that I've made and every move that I've made has always been a positive one, and one that I'm, find silver lining in all of it. But yeah, the mortgage thing was 3% of their business. But because Dodd-Frank, they would have to change their whole 97% of the business and what they were doing. So they just decided to unwind. And then getting back from the bank to the correspondent model again, I mean, it was another rather smooth transition. All those transitions can be a little bit clunky, but it was okay. Moving to the model that I'm in now, it's interesting. Like, I mean, it's not pricing was a big part of it, of course, and it's the difference there is almost laughable. I like when I first moved, you always want to do little comparisons, like how are you here, how are you here, and like, can you look at that again because that doesn't seem right. This is just so much. That was a really pleasant part of that, knowing that you're not have to go and get shot because you're not owned by private equity. You're not paying for marketing. You're not paying for branch, regional, divisional management, and all of those things have value. And I'm not knocking any of that. But after 24 years and a 4,000 person database, I can work that. And I didn't see the need um, for having to pay for all of that, especially with Yamco having a lot of those materials already that that do exactly essentially what I had before, but without the big overlays and cost that affects pricing. And the other piece of it too, I was a little surprised by the amount of investors, because where I had come from before, it was huge. We had 70 something different investor sources, our own internal money, a small bit of our internal money, and we had, other broker sources. But looking at this broker list of 178 or something like that. It is like drinking through a fire hose on what you have. And the Sifter program does a really great job of you know, just
Weeding a
funneling
lot of that
down what
stuff
you,
out. Yeah, and it
yeah,
sounds
yeah,
like
yeah, yeah.
you enjoy that, like almost being uncaged is the word we hear a lot. We are in a lot of those IMBs and the big banks. It's like their vanilla type of ice cream. It's either that or nothing. And like here, there's multiple different flavors and stuff. The compensation here is significantly better, right?
Well,
And you're not giving it up, right?
that's another thing that I think is interesting, because every situation is unique. Where sometimes it might make sense to work for a lot less because there's a bigger picture. And so you may make an exception where, if I'm having to make such a huge exception on this particular deal to correspondent, those exceptions are often not granted. And then
You're not in
oftentimes
control of them.
you're not in control of it. And yeah, there are cases where there aren't like caps on what I make. So I can make considerably more per deal and still find that my pricing is a lot better, even though my compensation is significantly better. So that's pretty
Right, it's almost
interesting.
like the best of both worlds. You don't have to give up good compensation for good rates, right? And then it
Right.
almost makes, I mean, I originate like you do. It almost makes you feel good when people call you and you feel like you've earned. For me, after doing this over 25 years, this platform has given me that peace of mind that I feel like I've earned what I make and I feel good about it. I don't go home every day wondering if I could have made more. I don't feel bad for the fact that I got compensated for the hard work I do. And better than all, when they call me with, minutia questions or things that are a little bothersome or over the top, I'm like, well, great, Michael, this is what you're getting paid to do, right?
Yeah.
So much
Right.
more stress when you're on these other platforms that are paying you less, comping your commission, comping how much you can make, and making you work twice as hard. And then you're not so happy with all of it. And you're constantly on the phone with a middle manager who's really not
Hmm.
going to help you in any sort of way.
You
So it
know,
sounds like you really do enjoy this model.
it's kind of fun to like, hey, shop it. Like, here's what I'm providing, and I'm encouraging people to shop because it is that much different, and it's kind of fun to see that. And as a correspondent, probably one of the more frustrating things, well, certainly for me, and I'm sure you remember, and everybody else in the industry has been doing it, like having to get pricing exceptions is so frustrating, and it just it feels like, let me go in the back room and talk to my manager. Okay, why didn't you give me that the first price, the first time around? I'm like, I know, I'm trying to, but I can't. Like, okay. And you have to really wait, like almost waiting for these, okay, well, I'm out. And then they'll make their exceptions. And that was really frustrating and also time consuming. It took so long to get through that whole process of getting a deal that just made sense to begin with.
Yeah.
And I don't have to do that anymore. Sometimes that does mean I may have to make a bit of a pricing exception, except that with our pricing model, those exceptions really aren't, you're really not making much of an exception, just where pricing sits with us. But yeah, it's been
Yeah.
freeing of like a lot of
Unpaid
free
and
time.
freeing.
Like,
It's a great word.
yeah.
So let me ask you, because we're talking about rates and comp and things of that nature. And the one question that we all get asked thousands of times are, where are rates going? Are they going up? Are they going
Hmm.
down? Now, I have a constant line, and I always tell people, well, you'd have to ask the bond traders. And then they go, well, if you were a bond trader, what would you think? Like, what are the bond traders saying? And I always joke, if I was a bond trader, I wouldn't do this because those guys control economies and control a lot more
Hmm.
of what's going on. Do you feel from your experience, and although it's a little outdated, but any correlation between those days doing bonds? Obviously, they might have been different. I don't know if you were dealing with MBSs or not, but you do understand Wall Street. You do understand the segment more than probably the average loan officer does of where rates come and go between the market and stuff. Can you shed some light on that, how that has helped you at all in your career when you're talking to, let's say, some of your Wall Street clients or some of the more sophisticated buyers that are a little more entrenched in where rates are?
Yeah, we did have an MBS desk. I was on the muni bond desk, and so I dealt with like geo bonds, schools and things like that, and bridges and freeways. But I think what it did is like looking at trends, right, is always helpful, right? The trend is your friend, whether it's this way or that way. You can see opportunity based on where things are going and where the money's being moved. And I think that's been helpful in helping people make decisions. Like, hey, look, here's 25, 50, 100, 200-day moving average. And here's a, 5-year chart of generally how things are going. And then, adding in different fundamentals, jobless claims or inflationary numbers and that sort of thing to sort of tie in with all of that certainly helps. And where we are now with these times that are a little bit uncertain and the guidance that I'm giving is certainly kind of, gosh, the guidance that I give now, given that I feel like, well, let me start again. Are you asking me for what I believe is the direction of rates?
No, I could care less. I just
Okay,
want to
yeah, I didn't
know.
think so.
That's what every client asks. What I'm really asking you is, because of your experience and understanding the logistics of how bonds work, whether they're muni bonds or MBSs, the fact that you have an education in bonds and understand, because let me back up. Generally, a client calls us and says, where's rates going? And the misconception that clients have is that Ian Olsen is a savings and loans, where you are going to put his loan on a portfolio of your own money at some bank, and everyone is just concerned about the Smith loan. The general concept that most clients don't understand is that you are a borrower put in a pool between 10,000 to 10 million loans that are put into a bond that are
Hmm.
traded as a mortgage-backed security. So the question is, can I fit you into which box of an
Right,
MBS that it goes into? And with
right.
some of that experience that you have, do you find yourself educating the clients a little better on that part of the process and explaining to them, not necessarily, and also getting into them with trends? So both. Are you talking to them about explaining to them and educating to them where their loan actually goes, what happens to their loan versus servicing of their loan, and how to watch or monitor some of those trends?
To your last point, yes. I don't get into the weeds too much with most people. I do a lot of work with financial advisors too, and they're very analytical and they get the arbitrage play or the this and the trends doing this. And so we can get into the weeds a bit more about that. But generally, I try to keep it a little more high level and we talk more about trends because that's going to be a little bit more specific to the individual borrower about because they have a certain timeline like hey in the next quarter or year or this or whatever. And so we'll kind of tell the story based on where the economy's been, where it is now, where we believe that it's going to go, and how does that affect you in this way or that way. The prices here and the cost of money here, and that constantly being a fluid thing, where that might lead based on economist reports on housing values or cost of money and where it may make sense to do it sooner, or maybe you hang tight, or maybe you structure something, with no cost because you believe the market's going to be improving, and then you can essentially redo, in 6 months to a year. And so we have a lot of those stories that we'll kind of put together and discuss, talk through, and just figure out what makes sense. Because everybody, as you know, is they each have their own financial plan. And so you just, yeah.
That's very helpful. So I want to segue here into a general question that I have with most people that are on the podcast is how do you build strong relationships with your referral partners and with your clients? I want I don't really want to ask you that question. I want you to like maybe go a little deeper. And the reason I say that is because you happen to be like I started off the podcast, you're an extremely friendly guy, very, very personable, fun guy to be a wingman with at any sort of like, cocktail networking party and stuff like that. You really built your business around your personality, which is a big, strong personality part. But where do you see that like you really focus in some of those relationships? What are maybe some of the longest relationships you've had or some of the closest relationships you have? And how do you for anyone that's listening that's either new in the business or someone that's been originating for a long time and wants to like change some of their habits, what's some advice that you would give to people as to how you do so well in your relationships from the way you built them and to the way you sustain them?
A long time ago, a fellow told me that, when you're in sales, go to every function, go to every event, be out there, and you find yourself in places that you just enjoy being most. And I'll tell you what, the most business, when I'm doing the most amount of business, reflecting back, I find out that I'm also having the most amount of fun. And so I'm finding myself doing things that I love with people I enjoy. And so we're sales, it's a relationship business. And so I find people that are like-minded or that I find interesting or that have interesting stories. Because everybody's got an interesting story. So I'm curious. I'm curious about people from all walks of life because everybody has a story, and sometimes they're not, so they don't always just like let it out. But I like to dive in and like, tell me how you got this, from Bombay to here, or to Mumbai from here, or wherever to here. Like there's a path that's got a story that's I find interesting, and so I find people interesting, and I know that everybody's got a story, and I just like to hear what people have to say. And so that has been a very helpful thing in my business, just, I guess, curiosity.
And it's also interesting, you mentioned it before, but like how your rugby network is like that network that doesn't stop giving, right?
It's
It
wonderful.
got you into bonds, got you into mortgages. I believe you now still work with some people and still have in your regular life, right? Some
It's
of the
did
past
my
owners
wedding.
and the
Yeah,
people,
yeah,
right?
yeah.
It's kind of like a network more than anything. And I find that many of us had maybe not rugby, but we had something in our lives like a rugby. In other words, some sort of network or some sort of passion of life sport that we were very into. And many people separate between church and state, between like, well, that's my personal life and this is my business life. Any advice for people as to how you found a way to commingle the two, where your hobbies and your enjoyment have become part of your work network and the friends and people that you do work with?
We best that again.
Yeah, I'm asking, how do you really commingle the two? Most people separate between their personal life and their work life. You've seemed to have done a really good job at commingling the two between your rugby network to your friends, to your family. Most of the time, you and I talk, if you go out to like beers or a party or like hang out with like someone at some function or networking event, half that room are people that you do work with, from financial advisors to
Yeah.
realtors. How did you bridge the two worlds between work and home to make it
I
like
never
one
I never
network?
went out and I never, another person said, gosh, when I was first getting like the whole Series 7, all the financial advisory stuff, he's like, don't hand out your card. And I haven't had order business cards, but they'd sit in a box. He's like, don't be that guy handing out your business card. Get theirs, but I didn't want to feel like I'm chasing people for business. I just found that having conversations with people, what we do, Michael, is so part of an everyday life for so many people. Buying a house, whether it's furnishing a house or doing a remodel or doing this or that, those conversations will just come up. And so I very rarely let anybody know what I do. I mean, if I'm walking into a new room with people that I don't know, I don't generally tell anybody what I do. is just something that will come out of conversation because it may be asked of me after I'm asking, questions, and they'll turn the story. Oh, well, what about you? I'm like, well, this is what I do. And then it all of a sudden is like, well, hey, I have this question about, and it generally goes that way. I don't like to be that guy where people will run because I'm asking for business. I'd rather
You don't
just
like being that guy
go
that
into a
walks in with a big name tag saying, "I'm Ian, the mortgage guy."
Yeah, exactly. That's what I don't want to have because I would rather have a relationship. And this is not a recipe for like, well, what I want. I want to find a relationship and find out if somebody just enjoys being around me and vice versa. And if they do, then we can go meet, have coffee, go, do some activity, whatever. And so, yeah, generally, I don't say much or do much about my business. I just try to be around people and eventually that all comes up. And like I said, it's such a big part of everybody's everyday life that the conversation of housing or financing or markets or economy and I feel comfortable enough to talk about each of those things in a way that is non-threatening or non-pushy and that's worked.
So let me ask you, any fun story you can share with us that you have experienced in the last 25 years of your career? That was like a funny moment in mortgage, whether it was with a realtor, a financial advisor, some partner, or with a client, you know, something weird or quirky that may have come up. Like for me, I always remember I was once literally in New York at the time, and I'm walking on the street and this Asian woman like walks up to me and she's like, "Michael." And I'm like, I'm clueless. I'm
Oh,
like, don't know who
scram.
this person is, right?
Oh
And she's like,
gosh, yes.
"Michael." She's like, "You're my mortgage guy." And I just couldn't place the two. Now, to your earlier point, she was like, "Oh, we did our closing like 2 years ago. You came to the closing." Obviously, I meet a lot of people, and I don't have photographic memory or whatnot. I wouldn't have stopped her anywhere. And to recall the exact story, I think I was like in a Trader Joe or something. And it just was like, I was just in a different mental headspace.
Out of
I was like,
context. Oh gosh, panic.
and I was like, "Wait, do I know you from, like, my kid's soccer game or something?" I don't know, and then she was like,
Yeah.
"No." She was like, "I'm your client." It was just, like, a weird context. Any funny, weird, quirky story over the course of your 25 years you wanna maybe share with anyone?
Oh gosh, I'm sure there are many on the spot. On the spot. This might have to be a part two segment for me to come up with some, but I know there's got to be plenty. I mean, gosh, we've done how many thousands of these things. So,
Or just a funny story, even with other colleagues, mortgage guys, of, like, fun holiday party or something. I don't know, something that you can look back on in the last 20 plus years to 25 years and be like, "That was, like, a really fun moment in this industry."
well, I do have I feel really lucky that my history in the business, although it feels like I'm new every year because things are such constantly changing events, things are constantly moving and changing. But looking back on my peers and my people that I work with, and those parties, like the holiday parties and the awards parties and that sort of thing. And Michael, I don't know that I can think of anything this outrageous just yet. Um, I'll have to come back to that.
No problem. Let's segue into the last section here, which is I like to ask most people to come and join us for where they get a lot of their inspiration and some of their, the backstory of how did Ian Olsen become Ian Olsen. So, for example, I always refer to like one of my favorite books that I've read, and I'm curious what yours were that had the biggest influence on you. For me getting into the business, I was not a salesman. So when I first got into the business, it was very difficult for me. I was a technician, right? And I actually got into the business learning post closing. So I saw what it was like to sell off the loans on the secondary market. I saw what the
Mhm.
investors were looking like from an underwriting processing standpoint as to whether they'd purchase a loan or not. I saw how, as long as they stayed on the lines, it would cost us more money, and how I had that pressure. But I was able
Yeah,
to then reverse engineer at the very
that would be
beginning.
helpful, I would think. Yeah.
Yeah, so then when I would then go take an application, the bar would be like, "Why do I need a third pay stub?" I'd be like, "Well, the
Okay.
reason
Yeah.
why I need a third pay stub is because of XYZ, because if we don't have a full trend of where your bonus and commission came from, I can't sell this loan in the post-closing market," because I knew what the end game was, right? So fast
Right.
forward, I'm a
Right.
few years in my career, and one of my biggest influences, who I'm still very close to in my life, introduced me to a book by Michael Gerber called E-Myth, which breaks down the technician, the manager, and the entrepreneur. And the thing that was so fascinating for me is
I'm gonna write
I
this
started
down.
to get
Excuse
into
me.
sales, right?
What's the
And
book?
E-Myth, called E-Myth Revisited. It's a bestseller out there, millions and millions of copies sold. And he breaks down the difference between the technician, the guy that does the technical work, the manager who kind of like delegates out so that things are done from more of a macro level. And then you have the entrepreneur, the guy who comes up with ideas. And how the entrepreneur, although he's the visionary and the idea guy, he can't really put, the tools, the pieces together on the way. He's not technical, right? Knowing and understanding your personality and knowing and understanding where your strengths and weaknesses are, you know where to lean in on. Because as we all started getting successful in the business, it was always like, I want to be bigger. I want to make more money. I'll start my own mortgage company. Starting your own mortgage company is not necessarily just because, the greatest example he uses is there's a baker who's working for like the Sheraton of New York City, the Sheraton Hotel. And they do banquets for anywhere between 5 to 50,000 people, whatever it is, like
Mm-hmm.
thousands of people come. And there's an art in being a banquet, bakery chef. And he does so well. He gets awards. He's like crushing it. He's doing really well. And he says, look, I am so good at this. I'm going to go start my own bakery. And what
Mm-hmm.
happens? He starts his own bakery, Fifth Avenue, New York City, and fails miserably. No one comes, no one tries his food. He's making the same exact bakery goods that he was making for the Sheraton of New York City, right?
Right.
And he comes to realize that just because he was a really, really good technician for the Sheraton and getting paid well north of 6 figures for being a chef does not necessarily mean that he knows how to run a bakery. Running a bakery is a very
Right.
different business than knowing how to bake a cake. And I found that to be so rewarding within our business of knowing that just because I'm a really good originator, or just because I know rates really well, or maybe a piece of underwriting really well, doesn't necessarily mean that I'm going to be the biggest producer or I could run my own mortgage company. So what, does that like stir up for you any experiences that you had where you had some of those moments of figuring out where your strengths or weaknesses were?
Oh gosh, yeah. And I'm very well aware of the weaknesses that I have, but I do think, well, one book that I read was called Maximizing Your Strengths. And it's not about fixing the little dial-up networks. If you've got like a big T1 line, like focus on that and then put the people around you to work on those other things because your gifts are going to grow bigger than that way on where you just naturally shine than trying to fix these odds and ends. And I think that's the important thing about having the proper people around you. And another book on partnerships that speaks to that as well is like those people around you, whether or not they're people that work for you or side by side or whatever, need to be those that can fill in some of those gaps, right? And I feel pretty fortunate that like coming here and you introducing me to a few of these people, like with Tom and Brandon, and then the people behind the scenes
And
have been
me.
very helpful. Sorry, and you, excuse me, yeah, and you, excuse me. Of course, you probably should have said that first. You've been great, man. But the importance of having people around you who can guide and help you along and tidy up some of those loose ends that are not my strengths. And then the other, you mentioned books. Probably the most meaningful book that I've ever read was referred to me by my dad, and it was Atlas Shrugged. And I don't know if that you've read it, but it was just
What's the name of the book?
Atlas Shrugged by Ayn Rand. Ayn Rand. And it was essentially like allow me to do my thing and allow me to give what I want to give, but don't just take from me. Like it just there just talks about like everything and everybody has the purpose, whatever that role may be, and those roles all have value. I mean, there's a lot to take away from that book, but I just that was another meaningful one for me.
Yeah. Well, look, I appreciate you coming here. The podcast, that we're on here is the Most Mindset. And there's a play on that. Obviously, my last name being Most. And a lot of the mindset that we have here is based on how do we find people that are undervalued and underappreciated and show them their true value, as you have pointed out today, of being on a platform where you can originate with so much flexibility, not feeling caged in while making good money. But more than that is something like you just said, which really resonates with me is like, how can we all find our own version, our own mindset that allows us
Yes.
to be our true selves, right?
Yes.
In whichever way we want to originate. For those of us that have been doing it more than 10, 20 plus years, we know what we're doing and don't need to be told anymore, this is the way to do it. And I think the most mindset is what speaks to you most, right? Like what works
Right.
for you that you can bring out the best version of yourself. So I'm
Exactly.
grateful not only to have you as a friend in my life, that you're on the platform together. Love hanging with you and just appreciate that you made time today to be here today. So thank you, Ian.
I appreciate having the opportunity to talk about it. I hope to see you up here soon. Maybe we head off to the island and enjoy a weekend of fishing.
Love it. Talk to you soon. Thanks, Ian.
All right. Take care, Michael.